And welcome back, everybody, to another episode of the AJ Brown Show. My name is Cyprian Francis, and as always, with me is the most exciting man in trading, Mr. AJ Brown.
Hey, how's everybody doing out there?
I knew you would enjoy that because you often like to tell me you're the most boring trader, but maybe that's
Lazy.
maybe that's good these days, right?
Yeah. Yeah. A lot going on, right? With fears around another variant of the coronavirus.
Yeah, and I was looking at the S&P this week and it's just up and down and up and down. And I mean, I guess the volatility is normal due to where the entire market is. But what are your thoughts in general on just the reactions? I mean, I know it's coming from the new variant, but I mean, is it like, oh, okay, there's a new virus, the market tanks, and then the next day everyone's like, oh, it's not that bad.
I don't think people know. There's a lot of uncertainty. And like when you take a look at the VIX, I'm going to share my screen here and show you that when you take a look at the VIX, which is a measurement of uncertainty and fear, you can see what's happened in just the last 6 days since that coronavirus has been issued. If you take a look over the last months, right, we haven't hit this high even when we were taking a dip on the S&P 500 back in September. This is got some fear. Now, the VIX is a reverse engineered. What they do is they look at options, right? They look at options and they look at how much they're being used. That's basically how the VIX is calculated for those people that are kind of neophytes. It's a little bit more complicated than that. They reverse engineer the price of the options to understand how much of that is buying and selling pressure. Right now, people are buying options a lot, and options are traditionally used as hedges. In other words, insurance. When do you buy insurance? When you're afraid something's going to happen. So there's a lot of uncertainty and implied volatility in the markets right now because people don't know, right? People don't know. And, the S&P 500, if I take a look over here, it is dipping, but I have to say, if you, take a duplicate copy of this line that we've been using as a level of support, we're actually bottoming out exactly where we bottomed out last September. So I'm not actually concerned. The market is doing a good job of pricing this in, but any sort of news headlines that might cause more fear might, they're going to create more confusion in the market. But right now, I guess what's coming out is that perhaps this version of the coronavirus might be more transmissible, but might be less deadly, which is actually what happened 100 years ago to the flu, right? Because the deadly variants of the flu, they died with the hosts, right? And so the less deadly versions, the ones that, I mean, if you think about it, it's not like the virus itself mutates. The virus itself, when it has babies, mutates. So if the babies are more deadly and they kill the host, the baby dies with it. And the ones that become more transmissible are the ones that go around. So that's why we get our flu shot every year, or some people get their flu shot every year, is because after 100 years, the flu isn't nearly as deadly as it was 100 years ago, but it's really transmissible.
Yeah, and when the news comes out, from the White House and things like that, they're going to lock down cities again. They're going to implement new travel protocols. I mean, that uncertainty in itself, that's bad for the overall market because, I mean, you don't know what's going to come from that.
And you add to that some of the other things that some folks haven't been paying attention to, but is, Jerome Powell came out. He's the head of the Fed, and he's actually been renominated to stay as the head of the Fed. He came out as if telling, he's a little bit of a guy that is a straight shooter. And so he doesn't get involved in like the politics or the nuances of what's happening in the world. So he came out talking as if the coronavirus didn't exist. And he talked about inflation and he talked about what he wanted to do, which means he wanted to speed up the removal of quantitative easing, and he wanted to perhaps even put a date out there to start raising interest rates. Now, you combine that with this background fear that, hey, the economy could stop, and you don't get any hint from the guy that, hey, there might be a course change if something happens. Of course, there'd be a course change if something happened, but he didn't mention it. And so, that added to some of the insecurities. It's like, oh my gosh, this guy's talking about, handling inflation, and yet we could be having another dip in coronavirus, which I personally, and this is just AJ, so don't hold me to it. I think that it's just a news headline, this coronavirus. At our club, we call it transient external stochastic shocks. Transient means coming and going, very passing. External means it has nothing to do with what's happening in the market. It's something external. Stochastic means it has an exponential effect on the market. And a shock, well, it's a shock. And we have those all the time.
Yeah, and I saw an interesting tweet this morning. It was like nothing's ever going down again, and that's that reversal, right? That's like, all right, so we've got the news, we price it in, everything falls off, so let's just get back on trend.
Yep. And, as people get comfortable with the market digesting it, if you keep an eye on that VIX measurement and you see the VIX start to calm back down here, I'll bring it back up. As you see the VIX start to calm back down, you'll know that folks are feeling more comfortable with what's happening. Now, the VIX is something that we also pay attention to as premium sellers, which is what we are, right? Because the VIX and that implied volatility, when people are afraid and they're buying options, causing the price of options to go up, and we're selling options, we're in the pole position now. So we actually like it when there's more fear in the market, because when we sell our premium, we get a higher dollar amount.
Yeah, that's an interesting fact. And also, I was gonna ask, because there's more volatility now, does that mean that the liquidity in the options is higher? There's more contracts to be traded.
There definitely, you see an uptick on that. It depends, of course, on the underlying security that you're looking at. But yeah, we see more trading on options, but mainly we're seeing more buying, right? Because basic economics, when there's more demand than there is supply for something, the price goes up, and that's what you're seeing right here on that VIX.
Yeah, so let's go into, so we're seeing this spike in the volatility in the VIX. Let's go into some examples where maybe you're taking advantage of this, or you're seeing some signals come up.
Well, and first, I have to I have to ring a bell out. We both have different backgrounds than we usually do, don't we? I'm at my beach house. I decided to bring my little one down to the beach here in South Carolina, Surfside Beach. So that's why you've got a different background here. You're in Chicago?
Yeah, that's right. This is the mother's china set that we're going to be
Nice.
showcasing
Nice.
today.
I mean, the point is you can do this investing wherever, right? I mean, I'm here 3 blocks away from the beach, and I love the beach in the winter because I can take my little golf cart and drive it right on the beach and go right up to the ocean with it, and there's no people around. It's awesome. So my point is if you're gonna do some investing, feel free to do it in wherever you want to do it, right?
Yeah, all you need is not even an internet connection these days. You just need a phone, a
That
smartphone.
that's right. We're going to be talking about that in some upcoming episodes. But hey, I wanted to take a second with this episode because last night in our members only area, in our Thursday interactive workshops, we identified a ticker that I can't even it's a no-brainer. So the ticker is CLF. I'm going to pull it up here. It's called Cleveland Cliffs Incorporated. And I actually put together a little deck here. But before I do that, I wanted to show you guys we all of the people who are in my program, we use this little tool here. We call it the PSO, the Premium Selling Worksheet or Trade Worksheet. And you basically go through, find out what support and resistance is, and you fill in this little worksheet, and it actually creates for you personalized trade plans so that you can, follow it. And it does all the risks. So depending on the size of your portfolio, it's going to calculate exactly the number of shares that you could do this in. So with that said, the reason why I want to talk about this particular ticker today is because last night, as we delved deep into this, and this was actually a ticker that we featured about 3 or 4 years ago as well in our members only workshop, but we revisited it, and it's still phenomenal. I mean, it's got all the characteristics of a great premium selling trade. It's got lots of liquidity, so you don't have to worry about it if you have a big portfolio. It's nicely sideways channeling, which means the investors of Cleveland Cliffs, they're more interested in the quarterly dividend than they are in seeing this thing start to trend up or trend down. And finally, it just is really slow moving. That's probably somebody wanting to sell me something on my car. That's just ironic that happens during my
Or
TV show.
AJ, tell me more. Tell me more. I need more.
That could be too, but I think that was dealer services. The scoop is, let's go through it. I've got I put together, and I want to show you guys this exactly. Slideshow from beginning. There it is. And of course, I got to emphasize, because when we started our company back in 2004, we did have a scenario where the FTC came to us and said, hey, make sure you position yourself as an educational company. So realize that this is just for education purposes only. Yeah, I'm not giving you any advice or any endorsement to purchase or sell any security or financial instrument. I'm not giving you any advice, and nobody associated with us is giving you advice and all of that good stuff, right? I don't want any black helicopters landing in my front yard at the beach here. With that said, here's what we're going to do, and I'm going to go back and forth between this slide set and the actual chart. On an end of day fast MACD crossing with follow through. Now, what the frick is that? End of day means I'm not going to be looking at the charts during the day. At the end of the day, after the markets are closing, I'm going to look for a fast MACD crossing. Now, those of you that are kind of technicians out there, you might have heard of the MACD. That's something that Gerald and Marvin Appel, Marvin's got a company out there called Signal Alerts. Shout out to Signal Alerts. Gerald came up with the MACD years ago, and technicians have been using it ever since. And they're using this fast MACD. And in fact, for those of you out there, here's a little bonus. The fast MACD is where you take your MACD and you change the parameters to 6 for the fast, 19 for the slow, and 3 for the MACD average. So rather than the 1226, I believe it's 19, it's 6, 19.3. Actually, it's 12.26.9 is the original MACD. The fast MACD is 6.19.3. So in the evenings, we simply look for one of these crossings, which on this particular charting software, I get an arrow. So I'm simply waiting for the green arrow one of these evenings. And it looks like it's going to come either tonight, or it might come on Monday night or Tuesday night. And then when I write out there and I'm saying to you, make sure you have follow through, what I'm talking about is making sure that you, the day after you get that fast MACD crossing, that indeed the chart is still going in your direction. So if we have a MACD crossing of a green arrow up, we want to make sure on the next day that we're actually placing our trade that prices are still going up. So on that fast MACD crossing that's coming in the next day or two, dude, what we're going to do is either buy to open 500 stock shares of CLF or 5 contracts of these cheaper call options. These are the CLF January 2023 $7 call option. Now I'm using 500 shares here because my portfolio that we're using as a sample is about $70,000. Now 500 stock shares, or that's going to come out to about a $10,000 investment. So you want to keep, if you're doing stock, if you're going to buy the stock, you want to keep it to maybe about an eighth or a seventh of your portfolio. And of course, if you change any of the settings here that I'm going to be giving you, you'll have to recalculate your risk. But use about a seventh of your portfolio, and the same number of stock shares. That would be, if you're going to use the back month option, keep it at that same number of contracts as well, even though it'll be a smaller dollar figure. So make sure you're keeping your risk in check there, and then immediately place a stop loss so that you can protect yourself. So if CLF crosses back down below 1825, you're protected. And then what I want you to do is just frickin' wait. That's the best part of it. So again, we're currently trading, it looks like, where are we trading at right now? We're trading at $19.80 roughly. Let's see, closing price, 1979. So 1977, you can see it changing right here. We're going to wait for the evening that we get our little MACD crossing on the fast MACD, and then we're immediately going to do some buying, right? That's step one. And then you're just going to wait. Let me tell you what step two is.
But so AJ, you're saying there's two ways to get in this trade: either long the stock or the option contracts.
That's absolutely right. So I could buy some stock shares, or I could use the leveraged option. It doesn't matter. They both will work the same way.
However, the amount of investment is going to be less for the options, correct?
That's correct. That is definitely correct. You'll spend less on that. But also, I want you to realize that the risk is more on this one. So keep the numbers the same. You'll notice I'm either doing 500 of the more expensive stock, or I'm doing 500 option shares, which is 5 contracts of the less expensive call option. This has leverage in it. And so you do want to keep track of that leverage. That's one of the biggest newbie mistakes, Sip, is that people who get into options think they can do the same number of shares as, same amount, same dollar amount as the stock, whereas it's actually the same share number.
All
If
right.
you
So
if you do the same dollar amount, you're going to expose yourself to a shit ton of a heck ton of risk.
yeah, that's something we might be able to cover in another episode. All right. So step one is picking the position, and then
Yeah,
we wait. How long do we wait? Is there a step two?
yeah. You wait for the red arrow. I know it sounds too easy to be true, but that's it. That's why I like this stock. I wait for the red arrow. We got a red arrow just a couple days ago, but we're going to get our green arrow. The next red arrow is going to be when we sell our premium, right? So you just wait. And when you get that red arrow, you're now going to sell your premium. So you're going to match the number of contracts. This time we're going to do the Cleveland Cliffs December 17th, 2021, $25 call. Now, I want to preface this because I don't know how long this is going to take. Remember, I said wait. I don't know how long this is going to take to get my end of day fast MACD. And especially, I want to make sure I get the follow through on the following day. So if, this takes over a month, we might be using the next one. This is assuming that it's going to happen in the next couple of weeks, which is a good assumption, but I'm just prefacing it that if it goes farther, maybe I'll be using the January 2022 or the February 2022. And also this strike price, I could also play around with that. Wherever I top out, and that's where I get this fast MACD crossing, wherever that happens, I'm going to take inventory at the moment. And if I'm at 26 is the next dollar figure above it, I'll do 26. If it's 25, I'll do 25. If it's 24, I'll do whatever I'm close to. It's called using the at the money option.
Yeah, and that's a game time decision depending on the next signal setup. But what you're saying here is this is kind of what you're guessing it might be.
Yep, exactly. At the same time, I'm going to buy myself some protection. I'm going to go out to April 2022, $19 put. There's really no discussion there. That's exactly the option I'm going to buy as protection. So I'm going to buy the same number of contracts, 5 contracts. These are going to be cheap. When I get this crossing, these are going to be inexpensive. And then guess what I'm going to do after that?
Wait.
Yeah. Yeah, that's exactly what I'm going to do. I'm going to
and
wait.
if you were to go back to the chart,
Yeah.
we're waiting or for the assumption that it's going to hit that bottom support red line or consolidate there, and then over the next couple of weeks head back to that top red line.
Yeah. That's exactly right.
All right. So then, what's?
There's a third step. There's a third step.
Oh, let's get into that.
It's the last step. I'm going to wait for that next green arrow. And at that point, I'm going to get rid of those protective options because I don't need them anymore. And then I'm going to reevaluate where I am, and I'm going to repeat step 2 and step 3 over and over and over again as long as I can.
And what's a realistic time frame from step 1 to step 3 on average, you think?
So let's take a look at a trade that we did on Cleveland Cliffs. We did this back test trade, and we actually went with just some pretty conservative. So we were looking in the back here, and we saw this green arrow here, and we said, what if we got in? So the green arrow game here, and we got our follow through day. Let me get a better color here. Hold on. There we go. So our follow through day came all the way over here. And you'll notice Cleveland Cliffs has a tendency to create these double bottom things. And so we even went with not knowing that we were going to get another bottom. And so we did a simulation or a practice trade on that day. That's our follow through day after getting a few days earlier that green arrow. And then we waited and we saw that we got a red arrow, but then we didn't get follow through. And then we got another red arrow, didn't get follow through, another red arrow. And it wasn't until we got this red arrow that we got follow through. And our follow through didn't come until right here. So making sure that, again, everything is going in our direction. And then so let's take a look at the actual trade. It's right here, actually. So on September 27th, we bought our 500 shares of Cleveland Cliffs, cost us about $10,600. And then on November 1st was when we sold our premium. We made $1 a share and we bought our protection. Now on November 1st, we actually didn't have the April option available. So we had to go with the option that was, it actually was the January option. So I would have preferred to go farther out in time, and now the April option is available. So I bought this January option as protection for 70 cents, and we waited. And you'll notice we had expiration date. Remember, we talked about on our earlier show that every third Friday, so that was November 19th. We wound up getting to keep that $1 It expired worthless. The coupon, nobody cashed us in on our coupon. So we get to keep the stock and we get to keep the money. It's an instant dividend. So we keep the $1, and then a couple days later, we got that final green arrow. We sold it on November 22nd. This thing that we bought for 70 cents, we sold it for 69 cents. So we broke even. That's why I wish we had the April options at that time. If we had the April options, we'd sell it for a profit. Still, in just that short amount of time, and this is showing the current price, but if we were to liquidate Cleveland Cliffs up near the top of the channel, like at around $24 or $25, you'd see we're talking about just in a month's time having about 18.3% ROI. And, we did basically 2 days of transactions, 3 days of transactions, step one, step two, step three. Now, we're not going to liquidate that. What we're going to do is look for the best opportunity to do that all over again and just keep doing it and keep collecting those gains. If we're making something like 18% per month, I mean, that's not bad.
Yeah, and I mean the time frame on that is phenomenal, right? So that's a positive, but this example is to the long side, correct? Because you're buying the stock.
Yes, it is. Absolutely.
And there's three different ways to make money in this example. That wouldn't be the case if you were doing it to the short side.
Right. So when we use our software, when we're using our members only group, you'll see here that our software not only creates a plan, it creates four different plans, like you mentioned. We could write a covered call, we could write a covered put, we could do a bull call diagonal debit spread, we could do a bear put diagonal debit spread. All four of those plans get spit out of our planning software. And so in this case, we did a covered call, which was pretty straightforward.
Yeah, so I'm gonna go ahead and add the link, or your workshop link, into the chat right now. So if anybody wants to take the time to learn more about AJ's strategy, uh, the trading trader program, the weekly membership call, I'm gonna go ahead and add the link into the chat. If anyone hasn't seen it, go ahead and check it out. Sign up. You'll get all the questions that you need answered there. And I think we have a question here that says, getting access to the template, AJ. I mean, that's like your secret sauce there, right?
That's absolutely right. Come join us in our program. Um, and everybody, well, not everybody, folks that have been traders in the past, they have their own ways for identifying tops and bottoms. In fact, even in our program, we just did a whole workshop, a whole lecture series on what's called a fast reversal so that we don't have to wait. The reason why I featured Cleveland Cliffs today is because you could have something as simple as the fast MACD giving you red and green arrows, and you can still make this thing work and sing for you for double digit returns every month. But, if you were to use a more elegant, type of reversal, and you could go, that's like 3-4 hours. We've got 6 hours worth of videos in our program, in our web portal for members on different types of ways to identify reversals and how to do it automatically, how to let your trading software do that. That is our special sauce, right? But I featured Cleveland Cliffs on our live call today, Sip, just because it's like a no-brainer. Even a neophyte or a newbie could do this one without much thought. Even if you really effed it up and missed your signals, you could still make this one work. It's like, this is a great one to get your feet wet. I do, of course, if you've never done this type of trading, suggest you do it with a paper account and prove to yourself that it works. But this is one that you could do that, you really can't mess this one up.
Yeah, I'm gonna have to look up what Cleveland Cliffs even does as a company. I've never heard of them, but that's the beauty of the stock market, is there's these opportunities where these companies follow these trends that have been in track for years, and it's up to us to find and take advantage of the system.
That's absolutely right. Cleveland Cliffs is one of those companies that we like to follow as premium sellers because it periodically goes into these sideways channels, which is really good for selling premium, is when the stock kind of just meanders in the same price range for a long time. Cliffs will spend most of its time here. It'll have like little spurts of step function increases in price. And then the investors who are interested in this particular stocks, like I said, they like to collect the dividends. They're not as interested in seeing the asset go up or down in price. It's a boring stock, and that's the ones we like to make money on.
That's right, and that was a very thorough example, and I hope the audience appreciates it. We are in the first week of December, ending out the another pandemic year, I suppose.
Mm.
Anything that we should be aware of in this final month going into the new year that maybe some new options traders might not be aware of?
Well, I mean, of course, we're all waiting for the Santa Claus rally, and so far it's been very disappointing for us. So, when you're a new options trader, just realize that you're fitting your option strategies to the patterns that you see out there. I had a good question from one of our users last night, one of the folks that are part of our program, and they were talking about, selling premium against things that are trending. And I'll be honest, right? Swing trading, which defines like these moves that are like trend continuations, is a type of pattern that you see in a swing trade. It's perhaps the wrong tool for this situation. So folks that are so used to trading stocks are so used to being able to only do two things: either buy and sell at a high, or short, buy to sell to open and then buy to close, and make money on the way down. That's only two strategies. The minute you get into options, you have 27 different strategies to profit on just about every other pattern. The key is matching the strategy to the pattern that you're seeing. So it's like if you've got a toolbox, and if you have a nail, you use a hammer. And if you've got a screw, you use a screwdriver. And if you use a wrench, you use that on a bolt. But you don't try to use a screwdriver to hammer in a nail. And so if you're trying to sell premium, you don't do that perhaps on a trending stock, because at best it's not the best, the most optimal thing. You're going to, dent your screwdriver up, or you're going to mess up the nail. And at the worst, it's going to be catastrophic for your portfolio. So make sure you're matching the tool that you're using to profit from the markets with what's the market's given you, right? And so that's the key for this December, is make sure you're not just applying things that we've applied historically in December because of the Santa Claus rally. Look at what the market's telling you and trade appropriately, and get into options, because like I said, options give you so much flexibility in being able to make money from any pattern you see.
We got one question here for you, AJ. They want an update on the mat trade.
Yeah.
Is that something that you're still in, or waiting for an opportunity?
So Mattel, we wound up uh, getting exercised out of the actual premium, which was fine. Let's zoom back in here. So we sold some premium and it got exercised. So we made the max profit on the premium trade, but we're still in that protective option. So we're waiting for that next MACD arrow, the next green arrow, right? The green arrow occurs when this little blue line crosses this yellow line. We're waiting for that next low to sell back our protective option. Our protective option is actually in a profit zone right now. So even though we got max profit on the premium trade by getting exercised out, we're expecting to get the frosting on the cake now. So I'll have to report back to you once the total position is closed. But that's the beautiful part. That protective option is actually its own trade. So even if the main trade gets exercised or gets stopped out, that protective option operates by itself. And I'm just waiting patiently for it to give me the signal that it's at its best price. And that's when I'm going to sell it.
Yeah, we'll have to do one of those review videos, because I think those
Absolutely.
are great, where you go through the steps. And there's a follow up to that. If we take a look at AAL, is that something we still have on the watch list?
Yeah, yeah. We're still looking for a opportunity with AAL to either sell our put premium. So we were thinking, when we looked at AAL, we were talking about either shorting some stock or buying a deep in the money, far out in time put option. And now we're simply waiting. Again, look at this fast MACD. I'm waiting for the green arrow. In other words, for it to tell me that it's got its lowest price for me to sell the put premium. And if I didn't get into it with the shorted stock or the deep in the money put option, this could also be a signal for me to buy some stock or buy the back month deep in the money call option, right? I can play both sides.
Yeah, that looks like a good setup. And thank you, Grilled PBJ, for the question. Keep throwing them out. Maybe we'll if anyone wants to leave any other things they're looking at in the comments, we'll be sure to add it to the next show.
Yeah.
I do think we're getting close on time here, AJ.
Yeah.
Did you have a chance to enjoy some turkey?
Yeah. I'm a pescatarian, so I enjoyed some fish and some vegetarian options, some tofurkey. But yeah, I totally had a good Thanksgiving. And then I actually, you guys know that I do on the side. I've always wanted to go run away and join the circus. And now that I'm kind of independently wealthy from this investing stuff and I've got my days free, I've been taking some circus lessons. So I've got, I do that Cirque du Soleil crap where you've got this partner where I hang from the trapeze by my legs and my partner does all of these flips in my hands. So she and her family, she's a generation younger than me, which is cool because I'm the same age as her parents. They've been inviting me and my wife over to Thanksgiving dinner for years. So I went. My wife stayed home with the little one, but we brought her home a big platter. So she even enjoyed Thanksgiving. And the little one is just every day she does something new. So I'm just like totally mesmerized by this little one.
That's awesome. We're gonna need to add some of that trapeze footage into the mix at some point
We keep talking about that. We should totally do that in 2022.
when we get some good clips. All right. Well, I think it's been a wonderful episode. As always, if someone hasn't checked out the webinar, we've gone ahead and added the link into the description. Go ahead and check that out. Be sure to follow us on our socials, the Facebook, the Twitter, YouTube. We're even starting to get a little action on TikTok, so feel free
Yeah.
to follow us there. And as always, good trading, everyone. We'll look forward to seeing you in the next episode.
All right.
See you guys.